Good morning, good afternoon, and good evening, and welcome to this week's episode of Maconomics. I'm your host, Ross Mack, and I'm here to try to help you get to the bag. We got a new caller. Talk to me, what you got?
What's up, Ross, man? Look, I can't even front, dog. I tweaked. Definitely big tweaked, man. I ain't getting in invest like you said a couple weeks back, or whatever it was. Man, some of the homies done went in double day money. I'm salty because I should have listened. But help me understand how the market's even up right now. Like, it don't even make no sense.
Look, man, hate to be the guy to say I told you so, but a brother told you so, right? Like back in March, I was telling everybody right now is the best time to invest at the lows. Why? The market was down about 30%, and what you had was, opportunity to buy some quality name stocks for a true clearance rack discount price. I'm talking Black Friday shopping, right? And when you have companies being down, 60%, 70%, quality companies, if you have an opportunity to buy and hold for the long haul, literally it was just allowing you to create free money, right? And so let me actually help you understand what's been going on, right? So despite the fact that, you got record unemployment, despite the fact that you have coronavirus that is really impeding a lot of businesses from opening or actually operating back at full capacity, and three, you don't even have a vaccine for what's going on, yet the stock market is trading at its all-time highs. Why is that? When you have the federal government saying, we're not going to allow this recession to really knock us off. What we're going to do is we're going to just continue to buy and inflate asset prices. Now you have people that are typical investors. You got these large pension funds, insurance companies that generally will be buying corporate bonds, municipal bonds, or government bonds. Well, now you got the government actually buying those bonds. And as a result, those pension funds and those insurance companies, they now technically don't want to buy those. And what that is doing is that is now pushing people that would typically buy those bonds into buying equities. So when you have trillions of dollars being flown into the economy, being pushed into the economy, you now have to say, okay, those people that would typically buy bonds are now coming over to stocks. And as a result, there's no other place to get return. When that happens, they now have to go into a new market that they typically wouldn't be in, and that happened to be the stock market. And so what's happening in the stock market is you just have so much capital in there, right? You got people that would typically be, sports betting. They all downloaded Robinhood. They're investing. You got, typical, like I say, pension fund investors who would be buying corporate bonds and municipal bonds. Nope, they're now buying stocks. As a result, despite everything that's going on, the stock market has no conscience of what's going on, and it just keeps inflating because people need to chase returns. And so, I'm not going to say I told you so, but I told you so. You would have been up a lot of money. But once again, it's not too late, because one thing I'm going to continue to preach is to buy low, sell high, but more importantly, be a long-term investor, because over the long-term period, you're going to make money. That's just what the stock market has always done historically. I hope that helps. Next caller, talk to me, what you got?
Quick disclaimer, this your boy Ross Mack. I'm just trying to elevate and educate. Damn sure ain't trying to play a. So if you lose some money fucking around with me, it ain't my fault.
It's your boy Ross Mack. I hope you enjoy Maconomics. Now go ahead, go listen to some of this music too.
Oh yeah. Oh yeah. Oh yeah. Yeah.